City of Salem, the City Council Committee on Administration and Finance, co-posted with the Committee of the Whole, met in the Council Chamber on Wednesday, July 30th, 2025 at 6 p.m. for the purpose of discussing the matter of number 376, that the City of Salem hereby accepts the provisions of Massachusetts General Law, Chapter 59, Section 5, Clause 54, which authorizes municipalities to set a minimum threshold for the taxation of personal property, and hereby sets that minimum taxable value at $1,000. Personal property accounts valued below this amount shall be exempt from taxation. Notice of this meeting was posted on July 23rd, 2025 at 3:24 p.m. In attendance tonight from the A&F Committee, we have Councilor Davis, and from the Committee of the Whole, we have Councilor Hapworth joining us. Pursuant of City Council Committee Rules, Section 29, I, as Chair, hereby appoint Councilor Hapworth as a temporary member of the A&F Committee for this meeting only. Welcome, everyone. This order tonight is to adopt a section of Mass General Law that will provide a measure of tax relief for an estimated 187 small businesses here in Salem. This Massachusetts General Law authorizes a city, through local action, to establish a minimum value under which personal property accounts are exempt from taxation. This order adopts this section of statute and establishes that minimum threshold at $1,000. Not only will this extend some tax relief to our micro and small businesses here in Salem, it will improve the efficiency of municipal operations, where in some cases, the cost to the city to collect these smaller tax payments actually exceeds the amount owed. And this personal property tax is primarily on business assets such as equipment, furnishings, machinery, and as of now, 230 Massachusetts municipalities, about 65%, have adopted this exemption to some degree. There is more information on this in the backup documentation, and I also want to recognize, also in attendance tonight, Stephen Cortez, our Director of Assessing, and I also want to thank him for the work on this. This is a great opportunity for the city to do something that we can within our legal power to assist our micro and small businesses. And to start us off, I'm going to welcome Mr. Cortez up to the microphone to give us some more information. And thank you for joining us.
Thank you.
And feel free to, move that up, or, whatever makes you comfortable there.
Thank you for having me. I wish all the counselors were here. I wrote this really long speech, and they wanted a discussion, and rightfully so. They wanted information, and so hopefully they might view this at a later time.
Yes, more than one counselor noted that they will be watching the recording.
Perfect. All right, good evening, councilors. I'm going to begin by giving the basics of personal property tax in Massachusetts for local assessments and taxation. This might feel like a technical topic, but it plays an important role in how we fund local services, and I want to explain it in a way that's clear, even if you've never dealt with it before. Personal property is anything tangible and movable that isn't part of land or a building. Think of furniture, office equipment, machinery, or tools. What isn't personal property is anything permanently attached to the building or land, which would be considered real estate. But if it's something that can be moved, then it's personal property. Intangible things like stocks, bonds, and trademarks, which have no physical form but represent value, are completely exempt from local taxation in Massachusetts. Who is taxed and where? Personal property is taxable if it's physically located in Massachusetts on January 1st of the tax year. If you're a Massachusetts resident or business, your property is taxable even if it's temporary or in another state. If you're an out-of-state business, but your property is only here temporary, like in transit, then it's not taxable. The key date is January 1, and the city or town where the property is located on that date has the authority to assess the tax. Unlike real estate, there is no automatic lien attached to personal property taxes. It is simply an assessment on the ownership of the property. Who is responsible for paying the tax? Generally, the owner of the property on January 1 is responsible, but there are exceptions. For example, partnerships are assessed in the partnership name, but all partners are liable for the entire tax. If someone passes away, their estate or personal representative is responsible. For LLCs, it depends on how they're treated for federal tax purposes. If they're treated like a partnership, they're fully taxable. If they're treated as a corporation, they may qualify for certain exemptions. What property is exempt? Massachusetts law provides exemptions based on who owns the property and what type it is or how it's used. For individuals, exemptions include household furnishings at your primary residence, not secondary homes, which are considered personal property, clothing, small hand tools used by a mechanic, and small non-motorized farming utensils, boats and fishing nets up to $10,000 for those engaged exclusively in commercial fishing. Charitable organizations are exempt from personal property tax. For partnerships, trusts, and LLCs treated as partnerships, most of their property is taxable except for property already subject to another tax, like registered vehicles or boats. For corporations, exemptions are broader. Business corporations are exempt from most personal property except poles, wires, underground conduits, and some machinery used in the conduct of business. Manufacturing corporations are exempt from almost all personal property except certain large electric generating machinery. Telephone companies, financial institutions, and insurance companies are also mostly exempt except for poles, wires, and water-related machinery. How is tax administered? Each year, everyone who owns taxable property must file a form of list with the assessors by March 1st. The annual return contains property scheduled for the taxpayer to detail its assets. The taxpayer should provide original cost and date of acquisition, but does not have to provide an estimate of value. That information provided is not binding by the assessor. If the taxpayer does not file, the assessor must make their best estimate, and the taxpayer loses the right to an overvaluation abatement. The property is valued at fair cash value as of January 1. Typically, that means we look at the original cost of the property and then apply depreciation to reflect its age and condition. We rely on industry cost and market analysis expectation built into our CAMA system for mass appraisal. Depreciation must be based on age, condition, and quality of the property. Property still in use has a utility value, even if its life expectancy has been exceeded, and has a zero value for accounting or regulatory purposes. Utility corporations are valued based on the blended method combining a net book value and the replacement cost new less depreciation. Some types of property, like pipelines or telephone company equipment, are valued centrally by the State Department of Revenue. We use those values directly. What about abatements? If a taxpayer disagrees with the value assessed, they can apply for an abatement, just like they can with real estate tax, which is due the date the third quarter or the actual tax bill is due. Assessors have the right to audit a taxpayer's records within 3 years to ensure everything was reported correctly. If someone refuses to cooperate with an audit, they lose the right to have an abatement for that year. Why does this matter for our city? Personal property taxes are an important piece of our local revenue. For FY25, it made up 3.33% of the total overall city value, or $6,997,113 in the tax levy. As you know, it helps operate the city, funds the schools, public safety, infrastructure, and many services businesses and homeowners rely on. They ensure that businesses contribute fairly, not just based on the buildings they occupy, but also on the equipment they use to run their operations. And while personal property taxes make up a smaller share of the overall tax base compared to real estate, they remain a stable and meaningful source of revenue, especially for our commercial and industrial taxpayers. In addition, the new growth tax dollars we receive from personal property accounts is always a substantial component, which allows us to raise the tax levy and could lower the tax rate. Local options for small accounts. Mass General Law, Chapter 59, Section 5, Clause 54, Personal Property Tax Exemption. This is a helpful local option available. State law allows cities or towns to adopt the minimum taxable value for personal property accounts up to $10,000. If we adopt it, very small accounts, those below the threshold we set, would not be taxed. This makes sense because it often costs more to build, collect, and administer these small accounts than the revenue they bring in. Many communities choose this option to help small businesses and reduce administrative costs. It becomes effective upon a majority vote passage by the City Council. With options like the small account exemption, we can balance fairness for businesses, reduce administrative burdens, and maintain a fair tax base for the entire community. This is about balance, maintaining revenue for essential city services while being fair to taxpayers and practical about how we administer tax. The statute becomes effective upon acceptance by the City Council, which has the authority to both adopt and modify the exemption threshold by vote in future years. As of now, 230 out of 352 municipalities in Massachusetts, or approximately 65%, have adopted this exemption. The widespread adoption reflects its practical benefits, particularly for communities looking to support small businesses while improving administrative efficiency. A sample table of the exemptions amounts most commonly used is in the initial summary letter. In Salem, there were 187 personal property accounts with a taxable value at less than $1,000. The total value of those accounts is approximately $97,900. At the fiscal year 25 commercial rate, adoption would mean $2,214.50 would shift up to the CIP properties, or the commercial, industrial, and personal property valued over $1,000. In fiscal year 2025, the total tax amount raised from the CIP properties was $33,742,519.11. Thus, the amount shifted with the $1,000 exemption represents 0.006%. Also see the table in the original letter. Reasons for recommending a $1,000 threshold exemption. The $1,000 threshold removes only the smallest and least impactful accounts, avoiding unnecessary revenue shifts. Raising the exemption value to, say, $2,000 would more than double the number of exempt accounts and shift 3 to 4 times as much value off the tax roll, with no real added benefit. It should be noted that the CIP class already bears a greater share of the tax rate when we set the shift in December. It maintains fairness. This level targets only true small accounts, like minor furnishing or outdated equipment, not businesses with more substantial operations. Raising it any further would exempt businesses with more substantial operations, creating inequality for similar-sized businesses that remain taxable just above the threshold. A fiscal year 25 tax bill of $1,000 value asset would generate a $22.62 tax bill. Demand fees for unpaid balances are $30. This is obviously more than the principal tax. It aligns with other communities. Many Massachusetts cities and towns have adopted the same $1,000 threshold because it captures the most inefficient accounts without creating a burden on the remaining tax base. There are 41 communities that have adopted this proposed threshold. For comparison with what Salem is looking at, there are 21 communities that have gone up to 2,000, only 13 from 2,000 to just below 3,000, 16 communities at 3,000, and 10 from 3,000 to 5,000. Any larger exemptions are generally adopted in communities where either the remaining personal property tax base is substantial enough to absorb the difference without significant impact, or in municipalities where personal property accounts are so minimal overall, they have very little effect on the levy. Tight fiscal budget. The city has been operating with a careful managed budget for years, making it essential to prioritize policies that maximize efficiency. By eliminating low-value accounts that cost more to administer than they generate, this exemption supports better use of limited resources while maintaining fiscal responsibility. Proposal for adoption. The review of our current personal property tax accounts demonstrates that adopting the exemption under Mass General Law, Chapter 59, Section 5, Clause 54 of $1,000 would provide direct tax relief to approximately 187 small businesses with a minimal impact on the overall tax levy, amounting to a shift of less than 0.5%. This modest adjustment makes a compelling case for the exemption, especially considering that the overwhelming majority of municipalities offering similar relief relief have adopted to apply it to the personal property accounts rather than to the property owners who lease space to small businesses. In addition to offering meaningful support to small businesses, this exemption would streamline operations and reduce administrative burdens across several departments. The Collector's Office currently allocates significant effort and resources to collect small dollar personal property bills, often where the cost of collection exceeds the amount owed. On average, each quarterly personal property bill would cost about $1 to print and mail through our Deputy Collector, Kelly and Ryan. When combined with staff time to process returns, mail out reissues, and manage follow-up correspondence, the inefficiencies compound. The assessing department also incurs ongoing costs to administer these accounts, including preparing and distributing annual form of list mailings, tracking compliances, and managing data entry. Furthermore, unlike real estate taxes, personal property tax lacks strong enforcement mechanisms. As mentioned earlier, no liens are attached to personal property assessed, making collection effort more challenging and less effective. As an example, in fiscal year 2010, the collector pursued payment of outstanding personal property tax balances through small claims court and obtained a favorable judgment, though one that ultimately proved unenforceable. Adopting this exemption would modernize our tax administration, provide targeted relief where it's most needed, and allow city resources to be refocused on higher impact areas. Ultimately, this proposal is about relieving small businesses of a minimal but sometimes burdensome tax, one that is sometimes difficult to collect, while also being fiscally responsible by eliminating accounts that cost more to administer than they contribute. We have to remember that this exemption applies to accounts up to $1,000, many of which don't even generate enough revenue to cover the cost of billing, collecting, and reporting. I would also like to remind the council of the many personal exemptions that the city has adopted over the years to support real estate owners. We have approved a wide range of exemptions for veterans, seniors, surviving spouses, and individuals who are blind. The most recent exemption we implemented was the STEP exemption, or the Senior Tax Exemption Program, which will provide qualifying homeowners up to $1,365 in relief for their FY26 tax bill. In addition, the Senior Work-Off Program continues to offer eligible participants up to $1,478 in tax reductions in exchange for voluntary service to the city. For context, the overall fiscal year 2025 real estate exemptions amounted to $386,363.38. These programs reflect our ongoing commitment to provide relief to those in need, and the personal property exemption before you tonight is a logical extension of that same principle, aimed at small businesses that contribute to our local economy, but often lack the capacity to absorb even administrative burdens. Now, I have a piece that I wanted to say tonight that is to the concerns that were mentioned at the last meeting. Assessors strive to be accurate, but in the field of mass appraisal, perfection is not always possible. However, consistency is key. Our purpose is to remain objective and fair in all property valuations. When property owners disagree with an assessment, there are established processes in place to address those concerns. 1, we encourage you to reach out to the assessing department directly to begin a dialogue. Many issues are resolved simply through conversation and the exchange of additional information. We strongly recommend contacting us as soon as concerns arise or when assessed values are produced. This gives us the best opportunity to review the data together and, when appropriate, make corrections before the formal abatement period begins. 2, there are the adherence to the letters and forms we mail out annually requesting information. These are the form of list I mentioned earlier and the inspection request letters, which help keep our data current and accurate. Compliance with these notices is governed by Massachusetts general law, which outlines strict deadlines and limitations. And 3rd is the formal process to file an abatement. Abatement applications must be submitted during the month of January, which are due on the same day as the 3rd quarter tax bill. If you fail to file an abatement abatement in that specific time period, there is nothing we can do legally to adjust your assessment. It is also important to note that abatements apply to property value, not the tax bill itself. By law, we are not allowed to abate retroactively, and the tax bills remain due according to the statutory schedule during the abatement process. Ignoring tax bills does not make them go away. It will continue to accrue interest and late fees and could ultimately delay or prevent the issuance of city licenses, permits, certificates of occupancy, or other official actions. Also, regarding the suggestion that the proposal was being rushed or that the assessing department has, quote, failed to do its due diligence, I would like to clarify the process has constraints. As a department head who is not part of the city's senior staff, I do not have the authority to bypass the established chain of command. I had discussed this exemption proposal with the former finance director, Anna Friedman, before her departure. At the time, the FY26 budget was the clear priority, and understandably, this proposal could not be advanced sooner. Additionally, the proposal required review and approval by both the city solicitor and the mayor, which added necessary time to the process. I cannot and should not circumvent those steps, nor act outside the structure that governs all department heads. It was never the intention of the assessing department to back the council into a corner or, quote, rush a vote without discussion. However, it is also a fact that the council does not meet during the month of August, and I was obliged to bring this straightforward administrative exemption before you as soon as I could, while there's still time for thoughtful review with this committee hearing. As you also know, this is a revaluation year. The Department of Revenue has assigned us a representative from the Board of Local Assessments, and the assignment was only made on June 3rd. Since then, this proposal has been moving forward with the appropriate oversight. Given the revaluation timeline, there is a possibility that the city values may be requested earlier than usual this fall. That uncertainty made it even more important to bring this exemption before you now. Our goal is to help taxpayers understand how taxes are fairly distributed, to dispel misconceptions about the department and the city, and to build trust between the community and the staff who work hard every day to keep the city operations running. Tonight, I respectfully ask not only for your support for the proposed personal property exemption, but also for your support of the assessing department and the essential and often difficult work that we do on behalf of the city. Thank you.
Thank you.
Any questions?
Really appreciate all the information that you provided here. And yeah, a couple of points. I very much appreciate the extensive due diligence that was done, the data that was provided. And yes, your job is very complex, and I appreciated the thorough overview of where, the personal property, how that lands with the businesses. And I also appreciated, that you mentioned, that the focus the city does put on, your department does put on, at creating, tax exemptions, like you said, for seniors, work-off programs, and other, in any way possible that you can find, it's done. And now this option is to assist small and micro businesses, and I think that's terrific. It really shows an effort to help. And I also really appreciated the thoughtful process that went into landing, on the amount. I found that really interesting. I always appreciate when the city takes a look at how much it costs to process something, how much staff time, and and mailings and notifications, all that adds up to. If it's more than we're collecting, if it's if it's not in anyone's benefit that this process is going on, and clearly a deep dive was taken into that. And I also, appreciated all the details on that this threshold. I mean, to help, what was it, 187 small businesses, that's a large number, and it's also just common sense. If it's, you mentioned, it's minor furnishings and outdated equipment that this falls under. So I really want to state how I appreciate all of that, very much so. And also, I remember, in some of our discussions too, that the reevaluation that the city is getting in September. So there is a need, if we want to put this in place, to have our small businesses and micro businesses benefit from this as soon as possible. And so assisting them should always, be a priority, and the timeline respected for that reason. And I'll open it up to the committee for any questions that you have. Councilor Hapworth.
Thank you, Madam Chair. And I'll second the Chair's appreciation to Stephen for the work that went into this, but also just the preparation for tonight and the information that you provided us here. Just really appreciate that. I know there was a question about why now in this year, but I think you've addressed that. But I guess my question is why now in time? Is it something that we've seen more stress on small businesses? Is there more of an administrative burden on the city right now? Is there a reason why, I guess in your mind, it's important to do that this year in 2025?
Right. So one, it is a reval year, so it was brought up to me by my Board of Local Assessment rep as to do we have one, and this is something that I have been thinking about as I was talking with Anna Friedman before she left about. I think that I've been in this position for almost 3 years, so I cannot speak to why my predecessors have not done this, but I think that, getting my bearings in the job and then, finding out more and doing more kind of just opened my eyes to this is an opportunity. And also the real estate exemptions that come up for either renewal, which is the step, or new proposed ones like the veterans work off, it just opened my eyes to there is a dwindling business community here in Salem, and if we can do anything to help them, why not now? Would it have been great sooner? Yes, but today's the day.
Thanks. And I guess just the other question is just, is there any plans to get business owners or those who are impacted by this ready for this change? Is there potentially an FAQ, or is there anything else to communicate this out to those folks, just to let them know what's changing here and how they need to prepare for that?
So we have a list of all the property owners that are under 1,000. So it's definitely something that we can send them out and let them know. And also we can put it also on our website. And we could also look into maybe inserts in the tax bills.
Thanks. I think that just because something may seem simple, but there's always a lot of questions that come up, and I think it shows proactiveness on our part when we're able to put that information out there so that we can address those questions before they come up. But again, appreciate the work you put into this. Thanks.
Thank you. Councilor Davis.
Thank you, Chair Merkel. And a big thank you from me as well for all the information and the hard work. In terms of kind of jumping off the point of communication and just thinking about how we can do our part to get the word out when it comes to exemptions like this, if approved, and then some of the other ones that you mentioned affecting seniors. Is this information that's listed on the website under the assessors? So that's something that we can find and we can push out that information? Correct.
All of that information is on our website. We do hold a biannually or sometimes annually a workshop at the Council on Aging, and we give inserts in the tax bills to inform people of when we're having these. And we also are partners with the Council on Aging and also the Veterans Administration, the Collector's Office. So other departments also share this information when customers come to them and ask them, I need help, or what can I do? But it is on our website under the assessors portion.
Okay, thank you. Yeah, this certainly feels like a no-brainer to me. I feel really good about providing relief to small businesses, and especially the piece that both you and Chair Merkel mentioned about that administrative cost and burden as well of not getting, our money's worth back, just makes it all the more kind of a no-brainer to me. So happy to support this.
And I would just like to say that this, amount is not final. If it needs to be modified in the future, there's always that option.
Thank you. Yes, to your point, so you and your department can kind of see how, you mean that you can see how this lands, see how many it helps, and see if it could be expanded? Is that what you're referring to?
That is correct.
Great, yeah. I always think it's a great idea as well. Every time we put something in place, it's impossible to know exactly how something's going to play out, and I always appreciate when you continue taking a look at it and see how it's landing and see if we can help it go even further. So appreciate that as well. Any other questions? I guess I'll have one question. Then, depending how this goes tonight, we would need to schedule a council meeting in August. Is that correct?
I think so.
Okay, communicate with the clerk. Okay, thank you. Any other questions from the committee? Okay, Councilor Davis?
Thank you, Chair Merkel. I'd like to make a motion to recommend this order for approval.
Second.
Councilor Davis motions to recommend adoption to authorize the city of Salem to set a minimum threshold for the taxation of personal property and hereby sets that minimum taxable value at $1,000. Seconded by Councilor Hapworth. All in favor? Let the record show I see 2 hands plus my own voting in favor. The matter carries unanimously. I'd like to, before we make another motion, I again want to thank Stephen Cortez. I want to thank you for your hard work on this. And I'll mention one last thing quickly, too. You mentioned Anna Friedman. I know, as you always do, and she was doing, always scratching the surface for something more we can do to, whether there's something, in the budgeting or anything that can be, moved around or done, or any actions that can be taken that benefit the city fiscally and our residents and businesses fiscally. Having been the chair of this committee, I've watched that unfold in the last 2 years and appreciate it. I'll entertain another motion.
Motion to adjourn.
Councilor Davis motions to adjourn. All in favor? Okay, we are adjourned. Thank you.